Good morning, everyone. By way of introduction, we're holding today the webinar on the issuance of the new banking law in Egypt. I can wait a couple of minutes just to make sure that everyone logs on properly, and then we'll make the introduction for myself and my team doing the webinar today, and kick off our webinar. All right, so I think we can kickstart now. Again, I welcome everyone to our webinar on the issuance of the new banking law in Egypt. In a manner of introduction, my name is Ihab Taha. I'm a partner at Al-Tamimi at Co in Cairo, Egypt. I head the COCOM department and acting head of the banking and finance department as well. I have a little bit over 20 years of professional experience in mainly general corporate mergers and acquisitions, capital markets, and banking and finance, definitely. I would like to introduce my colleagues, Zainab Shodi and Omar Zaki. Zainab, please make an introduction to yourself.
Good morning, everyone. We are happy to have you on the webinar today. My name is Zainab Shodi. I'm a senior associate in the corporate commercial and banking and finance departments. I have around 10 years of professional experience in general corporate M&As, banking and finance, and capital markets.
Omar, please.
Good morning, everyone. My name is Omar Zaki. I'm associate at the banking and finance department at the I have more than 5 years of experience, mainly in general corporate M&As and banking and finance.
All right, so basically to start off, give you a bit of brief on who we are as a firm. Al-Tamimi has been established back in 1989 in Dubai, United Arab Emirates. Al-Tamimi has become quickly the leading law firm in the MENA region with an excellent understanding of local laws and regulations in the relevant jurisdictions. Of course, Al-Tamimi provides a full legal service through first-class legal specialists. We are present in 9 countries through 17 offices. We are present definitely in the Emirates, Bahrain, Egypt, Iraq, Jordan, Kuwait, Oman, Saudi Arabia, and Qatar. We have over 70 partners, over 350 lawyers of 50 different nationalities, all working under a fully integrated law firm. To give you a brief on our Egyptian practice, Al-Tamimi has been established in Egypt since 2015, which is now over 5 years. A lot has been done in the past 5 years. The teams have grown exceptionally, and the firm is doing a great job so far. Al-Tamimi is always keen to hold different webinars, conferences, and other events, always to shed light on new legal developments that take place in different jurisdictions at Corsica. We will definitely all looking forward for the exceptional times we're going through to end, and we might be holding more physical conferences again and seeing you face to face rather than doing e-meeting. So again, to start on the relevant subject matter of the new banking law, Egypt has historically been always suffering from different challenges of grey economy, and the fact that a large number of the Egyptian population is not part of the banking system and not integrated within the banking system in Egypt. The Egyptian government has made it clear that it is setting financial and monetary inclusion as one of the pillar and main goals of its agenda. The old banking law that was issued back in 2003, nearly 20 years ago, did achieve a lot at the time of its issue, definitely. And it gave a much needed reform at the time. The old law has addressed and rectified major issues that were present in the Egyptian market at the time, like rectifying deficiencies of previous banking regimes via improving capitalization requirements, governance and operational requirements of banks in Egypt, definitely abolishing distinction to a large extent between public sector and private sector banks, and indirectly enhancing the competition environment in the banking sector. 20 years or around 17 years later, with huge technological advancements and developments taking place worldwide, with internet, easy internet access, smartphones, e-wallets, etc., 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 the impact of such technological developments has had a great impact on how business is being done, how goods and services are being purchased and acquired, and settlement of considerations and prices being done. Emergences of e-payment, e-banking, e-currencies, and a lot more has taken place. Accordingly, the need for a new banking law has become evident. The CBE has tried in the past 5 years to cover the gaps resulting from technological advancements through issuing a lot of circulars, resolutions of the board of directors of CBE, and other regulations. However, a new banking law has become a necessity, and the government of the Arab Republic of Egypt, along with its legislator, has acted actually quickly and swiftly. And the new banking law 194 of 2020 was successfully issued on the 15th of September of this current year. The new banking law definitely is a landmark law that has a lot of new developments. It covered a lot of new grounds and regulated a lot of sectors that were not regulated at all or sufficiently regulated before its issuance. The CBE had to cover gaps, like I said, by issuing regulations and circulars to cover these issues, but without a solid new law granting the CBE the necessary authority and providing a proper framework for these matters, the banking sector would have suffered ultimately. The main issues we will cover today in relation to the issuance of the new banking law are as follows. There are a new set of internal governance of the CBE itself as the regulator, how the CBE interacts with different governmental and public enterprise entities in the market, the relationship with the foreign central bank, with its counterparts, international counterparts, and foreign central banks and foreign regulators. New requirements for banks in Egypt, whether in regards to their establishment, operations, governance, early intervention measures, and stronger supervisory powers given to the CBE over banks working in Egypt. Facilitation of different security package registrations, whether mortgages and share pledge arrangements to the banks, and definitely regulations of numerous new lines of business and products, definitely e-products and e-banking has been heavily regulated under the new law. And finally, we would shed a bit of light on customer protection, data privacy, antitrust measures, and tightening requirements on FX controls in Egypt and dealing in Egyptian pounds in the Egyptian market. So to start off, we would first like to talk about the internal governance of the CBE. Now, the Central Bank of Egypt, as we all know, is headed by a governor that is appointed by the President of the Arab Republic of Egypt via a presidential decree. Now, a new development is that the House of Representatives also have to approve the nomination and appointment of the governor. The governor appoints a couple of deputies that also have to be appointed by a presidential decree. They together, along with 7 non-executive members, would compose the board of directors of the CBE. One new development is that the head chairman of the Financial Regulatory Authority, the FRA, is also a member of the board of directors of the CBE. Now, that is a great development in our view because, again, the interaction between the products and services, between services regulated by the CBE under the new law and services regulated by the FRA are very close. They interlink, and there was a lot of confusion on the market on what needs to be regulated by the CBE and what needs to be regulated by the FRA. So the presence of the chairman of the FRA on the board of the CBE would definitely guarantee sufficient interaction on what services would be regulated under which authority. Now, on the relationship with the CBE, with the government and public enterprise and governmental agencies in Egypt, the CBE continues to act as the financial agent and consultant for the Egyptian government. The CBE has now, under the new law, been officially mandated to act as the financial consultant for governmental agencies when they seek financing from international and foreign banks. With the relationship of the CBE with its counterparts and other foreign central banks and other similar regulators, the CBE definitely has the right to go through protocols, MOUs, and other cooperation arrangements with such counterparts. There are new main developments in the interaction between the CBE and its foreign counterparts. On the establishment requirements, like Omar will give more details on this one, establishment requirements of foreign banks through either branch offices or a standalone joint stock company. If part of an international bank, the counterpart central bank would need to actually approve of the establishment in Egypt as well. The new law has also given foreign central banks for the first time the right, in cooperation and coordination with the Central Bank of Egypt, to actually audit their branch offices in Egypt. And when it comes to restructuring of insolvent banks, also the foreign central banks would also have a role. I'll now hand over to Omar. He will discuss a bit on the new requirements for the registration of banks, banks operation, revocation of licenses, and other aspects of the operations of Egyptian banks under the new law. Omar?
Thank you. Any entity wishing to obtain a preliminary approval from the CBE to establish a bank in the form of a Egyptian joint stock company or as a branch of a foreign bank in Egypt, it must fulfill a number of predefined requirements. The requirements remain unchanged under the new law, except for two main changes. First, the minimum capital for the Egyptian joint stock company is now must not be less than 5 billion Egyptian pounds, as opposed to 500 million Egyptian pounds under the previous law. And as for the branches of foreign banks, the minimum capital must not be less than 150 million USD, as opposed to 50 million USD under the previous CBE law. And second, if the Egyptian joint stock company is fully owned to a foreign bank, or in case of a branch of a foreign bank, the head office of the foreign bank must have a definitive nationality and must be subject to a foreign to the foreign counterpart of the CBE. This foreign authority must be subject, must approve the engagement of banking activities in Egypt, and must also approve the implementation of principles of combined oversight. The foreign authority as well is required to express no objection in relation to the implementation of the principles of joint oversight with the CBE. Also, a new licensing requirement is stipulated for the establishment of branch of a foreign bank, is that the foreign bank must submit an unconditional undertaking that the foreign bank shall guarantee all deposit at the branch, all the creditors' rights, and all other liability of the branch in Egypt, and an authorization issued by the foreign bank in the name of the manager of the branch and his deputy. Moving on to the revocation of licenses by the CBE under the new law, the CBE may unregister and revoke any license of any bank in a number of cases, including if the bank has committed repetitive violations or material violation and did not rectify them within a period conveyed by the CBE, and if the bank ceased to operate or requested to cease operations and liquidate the bank in Egypt.
Omar, I think one of the main developments of the new law is that before we go to restructuring and the CBE having control over a bank that is facing financial difficulties, hardships, or going for insolvency, there's a new measure in place, which is again a landmark, which is the early intervention rights given to the CBE. Would you like to shed a bit of light on that one?
Yes, yeah, I would like to shed a light on the new concept, this new concept, which is the early intervention. According to the new law, the CBE has now the authority to oblige banks to undertake certain measures in order to rectify existing problems that may result into the insolvency of the bank or may damage the interest of the depositors of the bank. The cases which would result in such intervention by the CBE include banking malpractices conducted by banks, low quality of the bank's asset, which would affect the financial soundness of the bank or the interests of its clients, low level of the profits achieved, which would threaten the continuity of the bank in the medium or the long term. In such cases, the CBE may intervene in order to oblige the bank in question to undertake any of the following: strengthen the governance and risk policies and accounting and internal control policies, form additional allocations and reserves or increase its issued and paid up capital, prohibit the distribution of dividends to shareholders of the bank and other shareholders, change the business model of the bank or merge it with another bank, dissolve the bank board of directors, or submit a restructuring plan to the CBE.
So in a nutshell, ladies and gentlemen, that introduction is set to safeguard the banking environment in Egypt, and giving the CBE those additional rights would ultimately mean that the CBE can actually interfere early and help banks that are facing financial difficulties not to ultimately face a solvency, because a solvency of a bank in Egypt, given the limited number of banks ultimately in the Egyptian market, would have a severe impact on our economy. So that is definitely something worth noting. Omar, can you also give us a bit on the supervisory role of the CBD over banks, the new developments under this part?
Sure, yeah. The CBE under the new law extended and strengthened its supervisory role over banks by imposing a new set of reporting requirements, which mainly are that banks are now obliged to submit quarterly risk reports regarding investment and credit portfolios of bank instead of semi-annual reports under the previous law. And also, banks are now, under the new law, obliged to report to the CBE on their financial position on a daily, weekly, and monthly basis. Also, a new development under the new law is that key executives of the bank must satisfy a number of requirements for their appointment in the bank, and must obtain the approval of the governor of the CBE for their appointment.
On the key executives, Omar, if I'm not mistaken, the key executives were not defined under the new law, and it remains a question mark whether the key executives would include chief executive officer and other chief officers of the bank, its board members, or would definitely need more definitions from future circulars of the governor of CBE or the board of the CBE.
Sure, yeah, this is exactly my view, and hopefully the CBE will shed more light and insights on the subject matter, which is the appointment of key executives. Also, a new development under the new laws that banks are now required to submit any amendment of its articles of association to the CBE before discussing it in general assembly meeting to get its approval on such amendment.
Before we move on, ladies and gentlemen, there is a Q&A button at the bottom of your screen. We will be taking questions in the last 10-15 minutes of our webinar. So please feel free to put in your questions in the Q&A section under your screen, and we will be happy to answer as much questions as we can at the very end when we conclude our Q&A session. Thank you. So moving on, there is two additional points that that I need to cover personally here. One of the new developments under the new banking law is the facilitation of mortgage registration. We have seen recently that the Egyptian government is more and more facilitating registration of different types of securities. The law of registration of movable securities have been enacted and allowed different types of securities like account pledges and other types of movable securities to be registered with the FRA. We've also seen lately a new development where the central depository law has been changed and for the first time allowed the registration of share pledge agreements. So now if a foreign bank or another lender that is not a regulated bank under the CBE acquire the share pledge, that share pledge, if registered before the notary public or has a date certain before the notary public, can actually be enforced in a very easy manner. And the lender, for the first time, has the right to enforce the share pledge for itself, provided always that a fair market value has been agreed or a fair market value mechanism has been agreed in the share pledge agreement. Now, the new banking law has also adopted more facilitation in relation to mortgages. Real estate mortgages and fund commerce have always been an issue in the registration for foreign banks. Real estate mortgages and fund commerce can only be, used to be only possible for registration if the lending banks are Egyptian banks or there is a local security agent. And it was always unclear and challenging whether the caps on registration would apply or not. The registration fees are around 1.5% of the value of the financing. And accordingly, the registration fees without caps being applied would be huge. And accordingly, acted as a deterrent for borrowers to actually want to go ahead and proceed with the registration, because it ended up on these amounts being added to the facility amounts and being an additional uncalled for liability on borrowers. Or ultimately, the banks would choose not to register these security packages and live with power of attorneys or unregistered contractual securities, which again acted as a deterrent for foreign banks to offer financing to Egyptian borrowers or issue financing to other borrowers where Egyptian guarantors would act as guarantors and offer collaterals or securities. The new law now, for the first time, has approved the concept of foreign banks actually registering fund of commerce and real estate mortgage, while benefiting from the cap of the maximum cap is 100,000 Egyptian pounds. Given the amounts of financings needed in the market, that cap is minimal and of a nominal value that would not impact at all the registration. And we believe that this is definitely a great new development under the new banking law. On the FX control, the old banking law has already stated that dealings in the Arab Republic of Egypt when it comes to sale and purchase of commodities and services in the Arab Republic of Egypt has to be in the Egyptian pounds. The new law had made a more generic statement that all dealings in the Arab Republic of Egypt have to be in Egyptian pounds. And accordingly, we are yet to see the exceptions the central bank would put into place in that in regards to that general rule. Once the effective regulations of the new banking law is issued, we will learn more on these exceptions and definitely will update you with new developments. Now, we would move on to the new services and new products covered by the new banking law, e-products, e-currencies, and other relevant matters. I would like to give the floor to my colleague Zainab, who will take you through these new developments.
Thank you, Ian. Before getting into this point, can I ask Joanna to move to this slide? Next slide, please. Thank you. This part of the presentation is actually discussing very interesting points with respect to the financial inclusion and e-payment and payment service providers. As we have mentioned earlier, the fact that the old law was not up to date and was not coping with the technological advances taking place, and the fact that so many fintech companies have started their business in Egypt without being regulated or understanding the proper regulatory framework that they have to abide by. The CDE was trying at the time in 2014, 2016 to close the gap as mentioned earlier. So they started their financial inclusion initiative, which was aggressively promoted over the past years, and it rewarded actually the Egyptian government and the CDE be rewarded by the World Bank as a model country for promoting for the global financial inclusion initiative. The CDE, when it was trying to close the gap, it had to issue several regulations that address mobile payments, technical payment aggregators and payment facilitators. However, these regulations were very brief in terms of it only identifies what is an aggregator, but the requirements were limited to an entity that has financial solvency and it should get an approval from or a license from the CBE. There were no proper visibility for new entities that would like to enter that market. And that the financial solvency was left to the discretion of the CBE to determine if an aggregator or if a person that wants to or wishes to engage as an aggregator or facilitator would that entity be easily eligible to get the license or not. And from another aspect, the regulations only address the aggregation and the facilitation, and it did not include the entire payment service, which ultimately in all other jurisdictions it cover the processing and the settlement of the payments. So basically they wanted non-banking institution just to aggregate and facilitate, and anything that is relating to the collection and settlement of payments, it had to be exclusively done by the banks. So all these aggregators and facilitators had to be interlinked and have the system embedded with the banks and backed up by bank accounts that are licensed by the CBE. However, the new developments under the law gives actually a very good aspect of regulating standalone PSPs, payment service providers, as well as payment operators. And they now identify payment operators as being able to process, accept and receive payment orders, collect, settle, etc. So the services encompasses the entire process of the electronic or other methods of payments, which is a great development, and it is coming more in line with international practices when regulating PSPs. So now the CBE under the new law would require to license payment operators and PSPs. The requirements for the licensing are not predefined at this stage in the law. They only refer to future regulations or circulars to be issued by the CBE that would ultimately determine in length what are these requirements. However, they only address certain aspects of these requirements, which should include minimum capital requirements, the standard and quality of the technology platform of the PSP and the payment operator, the security, cyber security, etc. As well as they have actually extended the oversight of the CBE, as mentioned earlier by Evan Omar, for the insolvency and early intervention concepts. They have also extended the application of these concepts over payment operators and PSP. So accordingly, you would imagine that payment operators could come into play in the market in parallel with banks and financial institutions, and they would be similarly and as complex as banks are being regulated. There are also a very interesting development that the new law had to introduce, given the broad aspect of the payment operations. They required payment operators to establish funds that secure and guarantee against operation and commercial risk that could happen ultimately when doing their activities in the market. However, the aspects of that fund, the size of the investments being made, etc., are still not provided, and we understand this should be provided under a standalone regulations to be issued by the CBE. Moving on to another aspect of the financial inclusion is the final regulations of the fintech companies. Fintech companies have very strong presence in the Egyptian market. However, the uncertainties as towards the licensing requirements and the regulators that they should be reporting to, and who's actually overseeing the operations of these fintech companies has now come to a clear end. So all fintech companies are now required to apply for a license with the Central Bank of Egypt. However, as part of the the inclusion, the financial inclusion that the CBE is aiming at. They understand that so many of the startups, they could be at an early stage, or the startup fintechs maybe. So they had granted a discretion to the CBE to give exemption or exclusion on certain elements of the licensing requirements. These exemptions could actually come to a full exemption on the license itself. However, this is left to the CBE's discretion on case-by-case basis, and we would imagine that there should be additional regulations as well as issued by the CBE to identify what are the requirements and when they would be able to grant exemptions or exclusions for early stage startup fintechs.
So it's definitely good to regulate fintechs. However, again, given the nature that a lot of fintech companies are startup companies, when you over-regulate, you might put obstacles and barriers for market entry for these startups. Again, I think the Central Bank of Egypt also acknowledged that fact and accordingly gave itself the right under the law to exempt certain registration or licensing requirements, capital requirements, and other requirements as may be decided by the Central Bank of Egypt, just to ensure that the fintech market and environment in Egypt continues to thrive and prosper.
Exactly. Another aspect that we want to shed light on are the e-banking and the regulations of the e-payments and e-banking and digitalization and digital banking as well. So as part of that section, there are new provisions that allow for banks and customers to use banking checks to give payment orders via electronic methods. So this is actually a very good start for them to start actually modernizing the monetary and economic system and understanding that having to have everything on paper, issuing paper checks could at some point be no longer the case. So now issuance of electronic checks is doable. Settlement and collection of checks between the banks via electronic methods should be doable as well, which would actually very much limit the time consumed and the collection and settlement of checks between banks.
Also, the regulator has covered the issue of the criminal aspect of checks. So whether a check bounces or is not collected for any reason, there is criminal protection for the beneficiary of the check. So even with the introduction of e-checks, the law has also continued providing the criminal aspect coverage of checks. So that does not mean that e-checks would lose any protections granted to paper checks. Okay.
Exactly. Moving to the third point is there's a very interesting provision regarding the digital financing. It's just single article in the law that actually allows companies that want to engage in digital financing and would imagine crowdfunding can get a license from the CBE. However, given the nature of the crowdfunding and the lack of proper regulatory framework in so many jurisdictions worldwide, it gives us a bit of ambiguity how would the CBE actually approach this topic.
We'll definitely be waiting for further circulars and regulations to be issued from the CBE on this aspect, because again, it's a single article, very short article, it does not give much detail. So definitely once the CBE issues more regulations on this one, we'll definitely keep you updated.
Moving to the final point and the financial inclusion aspect is the introduction of or recognizing the fact that the CBE is now recognizing e-currencies, digital currencies, and cryptocurrencies. So any entity or person that want to engage in the issuance, dealing, trading in relation to any sort or marketing as well, in relation to any sort or kind of currency or cryptocurrencies, they have to get a license from the CBE. However, we are still unclear how this item or this provision would be regulated by the CBE, because they just put in the concept that now it is allowable for persons interested in the trading and marketing of cryptocurrencies or digital currencies to come into the market, and they have to get a license. However, this should be better regulated by further CBE circulars.
Correct. Thank you, Zainab. Can you take us also through the concepts of consumer protection, data protection, and antitrust measures introduced in the new law as well?
Starting with the consumer protection, there is an express exclusion in the new CBE law from the application of the consumer protection provisions. And accordingly, the consumer protection law and the consumer protection agency do not oversee banks or PSPs or payment operators, any person that is being licensed under the auspices of this CBE law. However, the fact that consumer protection law does not apply to them, this does not mean that customers of banks or PSPs are having or enjoying any lesser or any lesser rights vis-a-vis the other customers of other sectors. So there are a set of provisions in the law that they impose on all payment operators, PSPs, banks, etc., that they have to make sure that all customers understand the services that are being granted to them, that all contracts or documents that have to be signed, they have to be clear enough and explains to the customer without any ambiguity what are the customer's rights, his obligations, etc. And actually, there is a committee established under the law by the CBE, whereby that committee can accept any complaints or reports that any customer might have, or any problem that any customer might have, that can be reported directly to that committee of the CBE. So the role of the Consumer Protection Agency is now moved to or mandated to the committee of the CBE. Another aspect is the data protection. I trust everyone is aware that the data protection law that was issued earlier this year, it expressly excluded the application of that law on any entity that is being subject to the CBE supervision or licensing or being overseen or supervised by the CBE. That being said, the data protection law and its provisions does not apply to and does not oblige financial institutions, banks, PSPs, or payment operators, and other entity subjects of the law. However, there are a clear set of obligations that apply on all these entities, that they have to hold the data of the customers in strict privacy, and they are not able to disclose or divulge any of these data to any third party or to any person. And the only allowable disclosure would be on the basis of public prosecution and court order requirements.
Building on that, there was an issue on retention as well of documents. So definitely documents are of confidential nature, and I understand also that the employees of the banks would be also required to sign some sort of a confidentiality undertaking where they would be basically under a legal obligation to commit to the confidentiality obligations of the bank itself. Now, in the retention aspect of documents, the commercial code or the commercial law has mandated all traders to retain actual original documentation for a period of time. How did the new law interact with the retention requirements?
Yes, we have two important points here. The first point is the retention of documents. So the law allows banks and financial institutions, PSPs, etc., to deviate from the physical, or not necessarily deviate, but to have a parallel electronic platforms whereby they can save or retain PDFs or scanned copies of the documents. And if these institutions are actually following the regulations regarding the retention of documents, the retrieval of documents, and the retention period is being complied with. In that sense, if the bank or financial institution is using a scanned copy or other electronic medium, and a document on electronic medium, that document could be actually treated as an original document and would have the same level of power in evidence before courts. So this again is a jump towards the modernizing and understanding the market of we have to digitalize and electronize all the dealings in the market. The second aspect.
I think we can move to antitrust.
Yes. The last aspect is the antitrust measures. Similarly, as discussed for the consumer protection and data protection, there is an express exclusion of the application of the trust of the anti-competition practices law to financial institutions and entities being subject to the CBE. Although in the past, before the issuance of that law, it was a practical issue that the anti-competition, the Egyptian Anti-Competition Agency never extended its oversight over banks. However, that limitation was never written. It was sort of coordination between the two entities, the CBE and the Egyptian Competition Agency, and we understand that it was a big part of the parliamentary discussions who would have oversight over when it comes to antitrust aspects over the financial institutions and the introduction of PSPs and payment operators.
So just basically for everyone to understand, the antitrust law has been issued back in 2005, and it did not expressly exclude the oversight of the ECA or the Egyptian Competition Authority over banks. However, for many practical considerations, the ECA has never actually practiced any such authority over banks, and it had coordinated with the CBE on such matters without actually expressing officially its authority. And accordingly, the new law had to actually take this into consideration and gave that authority to the CBE and not to the ECA or the Egyptian Competition Authority. And can you shed a bit of light on how the ECA interacts on antitrust issues with banks?
Sure. As I've mentioned, it was a practical consideration that they did not extend oversight. However, given the fact that the banks or other entities will be excluded from the provisions of the antitrust law, which is in 2015, however, there are a clear set of obligations that apply on all institutions subject of the CBE, whereby they have to abide with all or avoid any antitrust practices, including products, the pricing of the products, how they approach the customers, if they are getting into joint venture agreements amongst themselves, or they are favoring payment operators or payment service providers over others. So although the ECA is not overseeing these entities, however, these entities are now subject to these obligations under the CBE law. And another committee that was introduced also in the law, similar to the consumer protection, is a committee that oversees the application of the antitrust measures and supervise the market in terms of if there's any bank or other institution that could committing any or engaging in any market practices that could be detrimental to the entire competition aspect. And there could be direct complaints and reports being submitted to this committee, which is also a very good development that ensure that although we are not reporting to the ECA, there is a parallel body under the auspices of the CBE that takes care of the competition medium in the market.
So I think that concludes our presentation on the main aspects of the new banking law. Definitely the new banking law is a big piece of legislation. There are a lot of other aspects. We have tried to highlight the main important new developments under the law. It's not a full inclusive list. we will be definitely happy to answer any additional queries you might have on points and issues not covered in this webinar. Our emails and contact details are on the screen for this. We can now move to the Q&As. If you just give us a few seconds to go through the questions, and we will answer them in order as much as we can in the time we have left. Thank you. We have three questions from Ibrahim Ramadan that we will take in order, and Zainab will be answering your queries as much as we can.
Okay, the first question we have is regarding, it sounds like the new law does not make digital banks by startups feasible, or is there separate treatment for capital requirement in that case? We have been highlighting through our part of the presentation that we understand that it could be very challenging for startups to engage in digital banking sectors or fintech in general. That's why the CBE or the new law introduces the concept that there could be a separate treatment, a bit of lightened licensing requirements, although they could be all required to file for a license to the CBE. However, the CBE could exclude certain requirements, could apply minimum thresholds in terms of capital requirements, etc. Or it's not still clear if the CBE would be able to exclude the licensing requirement altogether. So I think the regulations of the CBE, when it is issued in that respect, would give us more clear view on that aspect.
We would envisage though that CBE in the licensing of digital banks specifically would be more rigid in relation to the licensing requirements. Maybe in other fintech aspects, they might show flexibility and give exemptions, but for the digital banks specifically, I think they might be rigid on the requirements, whether capital requirements or other requirements that they will have in place as well. Moving on to the second question of Ibrahim. Ibrahim, I'll answer the second part of your question. Basically, how can we ensure that the regulator will not kill the startup growth and innovation? I think there are no guarantees, but again, given the fact that the legislator has given the CBE the power and authority to waive requirements altogether from fintech companies, or to waive specific requirements on a case-by-case basis, is definitely a statement of acknowledgement that the regulator and our legislation, our legislative bodies understand the fintech nature and do not want to impose too many restrictions to kill the startup growth and innovation. I'll let Zainab answer the first part of your question.
The first part of your question, actually, the current provisions of the new law do not provide detailed answer to your question. The point is that what the law is now saying, that fintech or any person that is offering any digital or financial technology related services over applications, etc., would be subject to certain regulatory framework and licensing requirements. And we understand from the language of the provision that there should be a comprehensive regulatory framework on that aspect. And it could actually distinguish between the different types of fintech companies and give certain exemptions to startups as compared to other well-established fintech entities.
On the third question, Ibrahim, on crowdfunding, again, we have made it very clear that it was one article that is not specifically very clear. So will accordingly the crowdfunding be regulated under that article? We will only find that out once the CBE issues more on this matter. whether through circulars or maybe under the executive regulation of the law once it's issued. And again, given that the head of the FRA is now a board member on the CBE, they will definitely discuss whether it should be under the realm of the FRA or the CBE. And again, once we have more details of this one, we can definitely keep you updated. We're moving to a question from Ahmed on the outsourcing activities, and I think Zainab or Omar, you can answer this one.
Concerning outsourcing activities, it is now required to register all vendor providing outsourcing services with the CBE. Do we have any clue about the type of such services? The new CBE law expressly stipulates that outsourcing services, the nature of the outsourcing services will be provided by a CBE circular soon. So no, there are no clues about the type of such.
What we know for sure that on the iScore aspect, a new development as well is that new iScore companies can now be independently licensed and give similar services to the services being provided now exclusively by the Egyptian company, the iScore Egyptian company that we all deal with now. And again, access to the other companies under the authority of the CBE and their access to iScore as well will be permitted, and not only banks and real estate mortgage companies. So that limitation to access to iScore has been also lifted, and now access has been granted to many other players than just banks and real estate mortgage companies and the like. We have a question from Shaira Khaled on antitrust. I'll give the floor to Zainab to answer this one.
The question is regarding the language of the antitrust related articles, and if we anticipate that there could be issues similar to those between the NCRA and CCA and the telecom industry. We believe these issues were being the topic in the past before the issuance of that law, because ECA was unable to properly extend its oversight of over banks and financial institutions. However, the fact that the CBE is now mandated to oversee and have a committee to which any issues relating to antitrust will be reported to it. So we understand that the involvement of the ECA in that aspect is demolished at this stage.
Again, I also believe that the language used in the new banking law in relation to the authority of Central Bank of Egypt on antitrust matters is definitely stronger than any language that has been used in relation to the NTRA under the telecommunication law. So I don't think that this issue that is being always in the news between the NTRA and the ECA would come into play in the banking sector. We will move on to a couple of questions from Rana.
So Rana's question is about new reporting requirements under the CBE law, especially for risk reports and reporting requirement on the financial position of banks, changing from daily and weekly and monthly reporting to the CBE. So this is can you correct me this one? This is right, Rana. Your understanding is correct. The CBE law now requires banks to report on their financial position on a daily, weekly, and monthly basis.
And the risk reports have been quarterly and not semi-annual anymore. So yes, you have the correct answer. We have an anonymous attendee. Is there an English text of the law available with the Tamimi? Definitely not yet. It has been issued on the 15th of September, so nothing is yet ready. If we have anything ready, we'll definitely share it when it's there. Um, Thank you all for your kind words. There is one more question from Khalid Sulaiman. Any special approvals from CBE to perfect a security? Now, the perfection of a security is not a CBE issue. So again, in the past, international financial institutions used to have a restriction that they need to be registered with the CBE, the likes of IFC, EBRD, to actually be able to register the security. Now, from the text of the law, that restriction has been lifted, and all foreign banks now can actually register and perfect their securities directly with the notary public without the need of being registered on any special ledger or register with CBE. Again, I think we're out of time. I understand that a lot of questions might not have been answered. So again, here are our emails and contact details. We're happy to answer any additional questions or queries you might have. And again, we will have a sound recording of our webinar. If anyone is interested to have that recording, we'll be more than happy to share it. Thank you for your time, and looking forward for further interactions with everyone. Thank you for your time, Jim.
Thank you.